Well, I might jump into mine if that's all right, Julia, and then we'll finish off with yours.
Sounds good.
So Ren is certainly aware that I am a fan of the payments market, Julia. So it's no surprise that I've picked iSign this. ASX ticker is ISX. Now, it's been on a great run this year. It listed in 2015, but this has been a year that we've really seen some great momentum behind the stock. So iSign this is a e-money and payments technology company, primarily focusing on the identity side of things. So they streamline the process for online identification, removing a lot of the paperwork that comes with that sort of old school 100-point check that you'd often have to do when signing up to services online. So I guess why is it important? Well, the world obviously is really connected now, and identity and fraud is something that is now becoming more and more common. Identity theft. And there's this thing known as the KYC, or Know Your Customer. And it's what a lot of, gaming and equities businesses and those businesses that are online that have, high value, high frequency, a lot of risk and turnover that require these KYCs or Know Your Customers. So iSign this brings together a total, process that patented. So to give you a rundown of how they do it. Previously, if you were to sign up to, say, a gambling site or an equities site or broker, you'd have to have a face-to-face interview, certified documents. Then the process was to move into, that stage where you would get asked questions of what's your mother's maiden name and what was your first dog called. And that was the old school way of identifying who you were online. However, the issue with this century, obviously, is that now all these data breaches is coming in, and phishing and identity theft that is no longer a trusted source. So iSign this brings in a way of identifying these checks by identifying your payment instrument or your card and proving that you own the card. So pretty important in the payment industry at the moment. And initial thoughts?
I know exactly what you're talking about because I'm going through this myself at the moment, where AUSTRAC requires you to know your client because of anti-money laundering as well as counter-terrorism financing. So it's all about trying to understand who your client is so that the money doesn't get in the hands of terrorists or there's no money laundering. So whether it's any sort of monetary transaction, it's a massive market, and it's a global one as well. So a really interesting company, and the company's up 588% in the past 52 weeks. It's amazing.
Let me ask you this, Julia. Would this iSign this company help you go through your process at the moment?
Now, to be truthful, there's lots of companies that offer Know Your Client and the KYC AML component of it. So a lot of it is already moving towards automation. I guess with iSign this, there's a few other moving parts involved. They're calling it the next neobank. So they have a few different products. They've got iSign this paid entity. They have iSign this pay. They've got Baltic banking service, and then they have something called a Pro Banks as well. So look, I think it takes that know your client identification process and it takes it a step further, which is pretty interesting. I was just reading up on it as you were talking, Bryce. I feel like I've taken over. But they've just signed an agreement with the Asia Pacific subsidiary of Visa, which is a huge deal.
Yeah, they're making some pretty big headway at the moment. So last year they were really moving towards taking full end-to-end control of all their systems, and earmarked 2019 as being one that they could really start to drive a lot of their end-to-end offerings, which you mentioned there was paid entity. So what they wanted to do, or what they are now capable of doing, is, for example, if you were to sign up to a broker or a gaming platform and you wanted to make a trade or a bet within 5 minutes, the old school way would be that you would need to have your your profile identified first, wait a couple of days, and then you could put in money and make the payment. What they are able to do now is they actually reverse that, and they take the payment first, and then in the process of doing so are able to identify and verify the customer while the transaction is taking place. So essentially, you can imagine from the business's point of view, the return on investment for using paid entity would be pretty significant, given that I guess you'd lose customers in some instances if they can't make the payment straight away. So that's kind of the space they're wanting to play in now. And all of this sort of technology is patented. And they also have huge global reach into, as you saw, that Visa and MasterCard and a lot of sort of central banks overseas as well, Europe and that sort of stuff, so that they can identify customers across the globe and help businesses grow that way. So yeah, pretty interesting company. And as you said though, Julia, it's an industry with a lot of competitors. However, I think this technology is patented and they're offering a bit more of an end-to-end complete service compared to some of their competitors.
So, Bryce, I have a couple of questions about their stock chart because it has raised some things. So the company was founded in 96 and it seemed to do very well during the tech boom and then fell away all through the 2000s, and then year to date seems to have risen about 1,000%, and then in the last week dropped about 40%. So that raises about 1,000 questions for me, but I'm going to start with what have they been doing since 1996?
So they must have taken over a ticker or something, because as far as I'm aware, they listed in 2015.
Yeah, so it would have been a backdoor listing where they've taken
that makes more sense.
over a shell company.
Yeah.
So okay. I think that's what they've done, because they definitely hit the markets in 2015, and I can tell you what they've been doing from 2015, and that's a lot of the back end work. They really didn't hit the market with their product till about 3 years after listing. I mean, revenues, we're talking a very small company here. Revenues for the first quarter, I think 2019, were only $7.5 million. That is up about 50%. But yeah, we're not talking huge dollars here at the moment, but their guidance going forward is that, revenue is likely to increase in the big double digits. So as I said, they see 2019 as a year of really going hard on their, I guess, offering. They did have a great run and then dropped about 40% last week, I think it was, because there was a report released saying that $500 million worth of stock or whatever had been distributed to their executives, and there was a bit of, I guess, revolt from shareholders about that, but it's since recovered somewhat.
Only exceeded their performance hurdle by $5,000 or something like that, and it just seemed like such a small amount to
nothing
get over that hurdle for such a large number of shares to be issued. So I think that was the revolt.
Yeah. It wasn't from any sort of fundamental change in their business or anything like that. It was an uproar from shareholders based on
more
exactly
issued
that.
capital.
Yeah.
So are you saying that now might be a good time to buy?
I'm not saying anything of the sort, Ren. Look, let's just say I think it's been on a great run. There's obviously a lot of interest and momentum behind it at the moment. And if things continue in the way that they sort of say that they are, then there appears to be some great upside, but also very competitive market.
This is exactly what you were saying about 6 months ago when you didn't buy the stock then.
I know. But anyway, we'll see.